Hey there, it's Jesse, your mortgage guy. I just want to take a few moments to talk about doing a refinance and what would be some reasons why somebody would take advantage of a refinance. If you're not familiar with what a refinance is, it's basically paying off your current mortgage and putting a new mortgage in place. And why you would do something like that, there's typically three categories we look at. There's a rate and term refinance, there's a cash out refinance, and then there's a debt consolidation refinance. So a rate and term refinance could be for a couple reasons. One, you might want to lower your interest rates. Here we're sitting at the end of 2024 and we're anticipating rates to come down next year. So I think there's going to be an opportunity to help a lot of folks who have bought and got a new mortgage over the last couple of years to lower their interest rates. So that'd be one reason. Another reason might be that someone wants to shorten the term in which their loan has left to be paid off. That term's called amortization. But what it is somebody who, let's say they get a 30-year fixed mortgage, they could be 10 years into the mortgage and still have 20 years left to go. Well, they might have gotten a raise or got a new job that pays more, or in some way came into a position that they can afford a higher payment. So they might choose to go and shorten that time to pay off the loan. So going from maybe 20 years left to 15 years left, the payment might be very similar or just a very small increase, but now they're shaving off 5, maybe 7 years left on their mortgage, which can save you thousands of dollars in interest. So that's another one. Another reason why you might just do a rate and term refinance is to take advantage of the increased value of your home and get rid of mortgage insurance. So an example of that might be you buy a home and you only put 5 or 10% down. You live in the home for a few years and now that's gone up over time. And your rate might be very similar, but you're able to refinance, take advantage of the new market value of your home. And now instead of only having 10% equity, you have 20% equity, and therefore gets rid of the mortgage insurance. So that's how we look at rate and term refinances and some opportunities that would make sense. Other options would be a cash out refinance. So when you do a cash out refinance, there's a lot of reasons why somebody would do that. Now, I'll just give you some of the more common reasons. One might be to take money out to make home improvements, whether it's updating a kitchen or a bath, maybe finishing a basement, maybe something around the yard, put a deck on or something like that. Oftentimes people do cash out refinances to maybe reinvest. Maybe they want to go buy a rental property or something in that regards. Maybe they want to start a business or add on to their business. Maybe they want to go out and buy out a competitor who's maybe looking to get out of the space and grow that way. So people can use the equity in their home, take cash out, and then do that. And then probably the last and another popular reason somebody would do a refinance would be a debt consolidation refinance. And what that really is using the equity in your home to pay off higher interest debt, whether it be a credit card loan, medical bills. Maybe you're going to take it out to pay off something for your business that has a high payment tied to it. So these are all examples of reasons why somebody would do a refinance. If you have a specific need or question around a refinance, let me know. I'm happy to help. Hopefully you found value in this and helps answer some questions you might have.